Hey guys, John with TRD Trader here, coming back at you with another Set It and Forget It Sunday, or if you're watching this on Monday, a Set It and Forget It Monday. I'm going to go over my calls that I called last week for the week of 10/18 to 10/22, and then after that, I'm going to go into the calls I'm looking at for the upcoming week. As always, you know what I like to do. I like to sell puts. Puts are where I enter into a contract and someone pays me a premium in order to buy the stock if it falls below a certain price. And so I try to find a floor where the stock likely won't go below, and hopefully the contract ends up out of the money where the stock price in the market is higher than what I promised to pay for it, so people don't force me to buy. When I do get stuck with stock, I just turn around and I sell calls, and it turns out, for me, it usually turns out pretty good. But anyways, so let's go into the options I called last week. So from 10/18 to 10/22, I had made almost 14 calls on a number of different companies: Academy Sports and Outdoors, Smith & Wesson, Blink Charging, Caesar Entertainment / Gambling, Fubo. They are a TV streaming site. Golden Nugget, online gambling, Marathon, cryptocurrency company, MVIS. They're like Sonar, Radar, Driverless Tech, Shift. They're like a home delivery car retailer. Six Flags, theme parks, Tupperware, manufacturing, retail goods, the Tupperware products that you buy at your house, you keep in your house. Viacom, multimedia, conglomerate, Hood. Everyone knows Robinhood, right? The people who are gambling using the stock market online. And Workhorse, truck manufacturing / rechargeable trucks. These are some of the companies I looked at last week. I made a number of calls. The ROIs ranged from, on a weekly basis, from 0.5%, for instance, Golden Nugget, to 1.5%. And they had various rates of chance of profitability. As always, I don't make these numbers up. I get them from a third-party website. You can see this website right here, optionsprofitcalculator.com, and I take screenshots of, a timestamp showing for, strike price, where is it? Strike price, 41.50. The premium or the coupon, whatever they call it, at 41.50 is 40 cents. This is going to be this week's call, so that's why it's not going to match last week's. But yeah, so I take snippets of where I'm getting to these chance of profitability calcs. But anyways, out of the 14 options I called, only 2 were exercised, Viacom and Hood. All the rest expired out of the money. So that means if you had chosen any of these 12 options that I had called last week, you would have made easy money. You would have made anywhere from, if we look at just the expired, you would have made anywhere from, on a weekly basis, 0.25% return per week to 1.5% return per week, or 2% return here for Workhorse. People, if they have an S&P 500 index, or if they have, somebody managing their money, they're lucky to get 8% return a year. Here you're getting 2% return a week. So this is why I like selling puts, as always. So these are the ones that expired out of the money, which means you made money, you didn't get stuck with any stock. Now let's look at bucket number 2, where you got stuck with stock. So 2 options expired in the money, and that means I had called a strike price of 40.50 as being the floor, but the stock fell below that strike price, so the person who bought the contract would have forced me to buy it, because that's why I sold the contract. I'm giving them the right to force me to buy their stock. And so these are the 2 options that got exercised. One of them did not end up immediately profitable. So if you got the stock, you couldn't immediately sell it for a profit. That was Viacom. In this situation, your basis is 38.43. The selling price is 37.50. So you take $1 loss per share. In a scenario like this, I would turn around and sell calls. You can sell a $39 call for 31 cents per share. So that comes out to be almost 1% return a week. So even when you're not doing, even when I don't call a great floor, you can still turn around and make almost 1% return a week. So, that's why I say I like doing this, because if you're not emotional and if you don't dump your stock at a loss, you can still make your money back. Same thing for Hood. You got stuck with stock at 39.16 because that's what your basis was. Your basis is what you were forced to buy it for, this 40.50, less what you got paid to enter in the contract, 134. So that's your basis. What you paid for it less what they paid you. That's your basis, and you could have sold it for $39.50 as of Friday close, and so you would have had a profit of 43 cents. So, I made 14 calls, 12 of them ended easy money. One of them ended not quite easy money. You still had to sell it, but you were still profitable, and one you had to turn around and sell calls. Not too bad for this week compared to some other weeks. Now let's look at the upcoming week. So for the upcoming week, 10:25 to 10:29, I am looking at, again, Academy Sports and Outdoors, Smith & Wesson, Blink Charging, Caesar. I don't know why these are showing up. I'm not looking. Give me 1 second. I'm going to filter out the blanks. Caesar, gambling, Fubo, video streaming, Golden Nugget, online gambling, Marathon, digital currency, MVIS, driverless vehicle tech, Shift, car, retail, online experience, Six Flags, I'm blanking, theme parks, Tupperware, retail goods manufacturing, Viacom multimedia conglomerate, Hood, fintech / stock trading company, Workhorse, green energy, rechargeable electric truck manufacturer. So these are some of the companies I'm looking at. As always, you need to be mindful. Some of these are weekly plays and others are monthly plays. Not all companies have a weekly option. Some you can only buy and sell options in 1 month increments. So you'll see that there's a 10/29 option, which is 1 week, and an 11/19 option, which is almost 3 weeks or 4 weeks. And so just be mindful of these two things. I have various rates of returns. I'm predicting, 0.5% here for Smith & Wesson, up to almost 3% for Robinhood. I have various strike prices. So if you have only $500 to play with, you can try to get in on Workhorse. If you have $10,000 to play with, you can get in on Caesar. If you have somewhere in between $4,000 to play with, you can get it in on Six Flags, Viacom, Hood, Marathon, and ASO, or you can get it on two companies like SWBI and Blink. I personally prefer to spread out my investments across a number of companies. You'll find that as you go through this video, I don't always call every company accurately. More often than not, when I make about 12 to 15 calls, I'll usually get 2 to 3 of them. I won't predict the floor right on 2 or 3 of them, but I'll predict the floor right on most of the others. And so me personally, I like to sell puts on a number of different companies to diversify the risk, because any one company might be impacted by a certain market risk or a certain market trend more than the others, or something that investors are specifically concerned about that one company. So by selling a number of different puts, you kind of even out your risk. That's what I like to do. And I'd say another thing to be cautious about. So on top of knowing that, be careful, know when you're selling a monthly call versus a weekly call. Another two companies on here that are the most risky and I would shy away from if you're relatively new to this: Workhorse, this one, and MVIS, this one. These two companies seem to be in the recent, in about the last 2 months, they've kind of been falling to more historical lows and lows that have never been seen before. MVIS is currently trying to find someone to buy it, and Workhorse is just not as a company. It's not performing. I think its revenues are growing, but the market's just not have a favorable sentiment towards it. And so the stock prices on these two companies have been falling like a rock, breaking through floors, and they're creating all-time new record floors. So in a sense, these are falling knives, and you don't want to try to catch a falling knife. You want to let it fall to where it's gonna fall, and then pick it up once it's fallen to the bottom. No one can guess what a bottom is. No one can guess what a floor is without doing deep financial analysis and trying to peg what investor sentiment is. And so I would shy away from these two options unless if you're comfortable. The only scenario I would say where it's okay to invest in these options is if you're okay with your money being tied up in the stock for a couple of weeks and turning around and selling calls. Feel free to experiment. But these two are relatively risky plays. At the point, I would say MVIS is the most risky. I see it as having the most room to fall. Workhorse seems to be bottoming out, but again, that's just speculation. I can't truly know where the floor is. It's, we're kind of in uncharted territories in terms of how both of these stocks are falling. But if I were to get in on any one of these two stocks, I would prefer to get in on Workhorse at the moment because I still think MVIS has room to fall. And I hope that they're both near their floors, but who knows? Recent activity of these two stocks has surprised me, and I've been, where I've been wrong the most about these two stocks. So just be careful with these two stocks. If you want to look at something like a more conservative stock, I would say maybe Caesar or ASO or Viacom. I think Viacom is particularly undervalued right now. Viacom, they're a well-known multimedia conglomerate. They're not growing fast anytime soon, but they're still a profitable company, and I think that they are unreasonably undervalued right now. I think it's going to pop back up, hopefully in the near future. Well, let's see if it has a gap up in the morning this upcoming Monday. But if I were to look at an option right now, a safe option, a conservative option, it would either be Viacom or Caesar. For long run growth, I really like Hood and the cryptocurrency companies. The cryptocurrency companies are they have the ability to be extremely profitable, and I think Hood long term is going to be definitely extremely profitable. At least looking at their last 10Q or 10K, I think it was a 10K that they issued. They were pretty damn profitable in their last financial statement. They are issuing new financials in the upcoming week, so be careful with that. The stock may continue to fall just because people may be afraid of it, but I think, my personal opinion, if they can keep up the amount of options revenue, if they can keep up the amount of revenue they've been generating from their users, I think the stock has a good chance of really popping back up after earnings. All right, guys, so I hope you're in the market, and if you're not in the market, I hope you're at least paying attention and learning things. As always, you don't have to participate in puts and calls. An easy way to make money is just buy stock you like maybe Amazon, Facebook, Coca-Cola, Ford, whatever, and sell out of the money calls on it. You can easily generate another 15 to 20% money selling out of the money calls. But just try to be in the market. As always, the Federal Reserve is printing money away. Inflation is crazy. And so you just don't want to keep your life savings in cash. You want to have it invested in something, whether it's real estate or, value stocks like Amazon, Facebook, whatever, that will grow in the long term. As always, guys, I hope you learned something. Feel free to let me know if you have any suggestions or comments. Feel free to drop a like and let me know if you want me to talk about anything specifically. Thank you, guys, and I hope you have a great day.